After another week in the battle of the stock market, a week that saw a massive jobs miss due to a shortage of both workers and materials, and approaching a week with many heavy hitters reporting earnings like Palantir, Alibaba, DoorDash, and Blink. Well, with all of this, many are coming from far and from wide with one simple question, and that question is just what? What, Charlie, are the top 3 stocks for this week? And we must be talking about that in this video. But first, I want to go ahead and give some updates on some requested tickers from last week. Let's start with crypto miners. So Bitcoin has been holding strong, but Bitcoin's failure to break out has led to stagnation of crypto miners Mara, Lovely Mara, and Riot, Riot. In this environment of interest rate scares, you're continuing to see investors demand more and more from growth stocks in order to consider them a buy. That being said, buyers right now are paying a lot less per coin mined than they were before, so that's a plus. But we really need to see that momentum come back in order to see Mara and Riot start performing again. They've also been trading very, very cautious ahead of earnings. Riot is going to be reporting earnings on the 10th, which I believe is Monday, and Mara on the 13th, which is Thursday. We know the business model is based around how much the currency actually costs, but also how many coins these companies can actually mine. But as always, make sure to put your seatbelts on, but understand that we are trading at traditionally oversold cheap prices, which sets them up favorably for a run if we do get a turn of the tide this week. I also want to talk about the Doge of coin. We talked about this one last week. My thought process back then was similar to probably a lot of your thought processes, that more likely than not, you'd see a pre-anticipatory run up to the SNL event, and then afterwards you'd see it dip. Pre-anticipatory run, but bad post-reaction, buy the rumor, sell the news. I gave it a 25% chance that Elon Musk would plug it hard enough to see a continued rally, but he didn't fit into that 25% chance. He fit into the 75% chance that it didn't. So during SNL, Dogecoin took a huge dip. But then today, SpaceX announced that they will be launching a Doge mission to the moon. They said they'd be accepting a meme-inspired cryptocurrency as full payment for the lunar payload. Obviously, my take on Dogecoin is still the same as it was the last couple times that I covered it, in that most people probably shouldn't be trading it, but if you're gonna trade it, you're gonna do it anyways. You might as well have a clear entry and exit plan so that at least you're not just totally gambling. I mean, it's still very difficult because the catalysts are just so random and there's just, there's no reason to it. Still, at least having some risk management can help you a lot. But for SNL itself, for some reason, I just couldn't get myself into it. But I highly recommend watching the Elon Musk scenes. In his monologue in the beginning, he revealed he had a condition on the autism spectrum, which really says a lot and is super inspirational from, a guy like Elon Musk revealing that. I love the fact that despite your hangups, if you're just super relentless and you're super dedicated to your vision, you can just keep pushing forward despite things that are trying to hold you down. That message coming from one of the wealthiest and most impactful men in the world is very, very powerful, and I highly recommend watching it. It wasn't presented in the most powerful way, but I think that if you watch the monologue and you kind of watch sort of how far he's come throughout his career and how much he's impacted the world, I think that it's really powerful. At least it hit me in a powerful way. In terms of diversification plays, we've continued to see some steady strength in our American Express, Visa, FedEx, and Simon Property Group plays, among others in that sector. There's a lot of data that shows that over the last year, very, very few retail traders have wanted to buy a lot of these slower moving stocks. And I've also found that to be true. Regardless of what the play was, even if it was a little bit more on the blue chip tech side, if I present on it on the channel, it tends to get lower views and people tend to roll their eyes a little bit more. And I think the reason is because historically a lot of these plays don't move as much as the growth plays and they're not as exciting as the growth plays. And look folks, I'm not a huge advocate for buying overvalued recovery plays that aren't even high conviction and you just want to buy them because the media is telling you to cycle into them. But on this channel, we've historically preached certain high conviction value plays as a way to move into a more stable portfolio, but those do tend to not get as much attention. Back on December 15th, I presented a video called The Real Opportunity for 2021. In that video, I presented sectors that I see as coming back first in 2021. I'll put a link to that below if you want to check that out. But I talked about credit cards, airlines, oil demand, Simon Property Group, and then I talked about growth sector plays like EVs and EV charging stations, sustainable energy, and the likes. Many of these stocks made it into the price targets list, the morning briefings, and on the daily videos. For the last year, we'd cover a lot of recovery plays before they became popular in media, like BA and CCL and the airlines and a bunch of other ones that were beaten down during COVID. But the point is you can definitely diversify, but diversify into high conviction plays. Diversify into plays that you believe are undervalued. Don't just buy something because everybody else is buying it, because that's going to keep getting you into new messes. You want to buy something that you actually believe in. Diversification is very important, but make sure that you're diversifying smartly, and also understand that when you diversify away your volatility and you diversify away your risk, you're also diversifying away some of your reward. You're sort of stagnating it out a little bit more. Obviously, there's a lot of people that would say I would prefer a smaller return in order to have much less volatility, versus other people would say I don't care about the volatility, just give me a really high return. But in both cases, you kind of have to look at yourself and say, okay, well, how much risk should I diversify away? How stable do I want this? How much reward am I looking for? What is realistic? What's not? And I think that that's a question that each person has to decide on their own. Okay, folks, so now it's time for the top 3 stocks of this week. And the only thing I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe. Also, I do want to give a quick shout out to all the mothers who watch this channel. I want to wish you a happy Mother's Day, and you're very appreciated. But I hope that on Mother's Day, we're not just focused on thanking mothers and celebrating them, but also thinking about the issues that they face. A lot of you have noticed that I have a breast cancer awareness bracelet that says cancer sucks on it, and I've worn it in pretty much every video, and I've worn it for pretty much the last 10 years of my life. Breast cancer is one of those issues that's really close to my heart, and you could probably guess why that is if you watch my videos. And so in the description, I'm going to go ahead and put some links to charities that support breast cancer research as well as help women that are fighting with cancer. I don't have any connections to these charities, but I've done my due diligence on all of them, and I think they're very, very worth it. So if that is something that you're considering, go ahead and click one of those links in the description to read more about it. Okay, let's start Disney. So Disney will be reporting earnings on Thursday, and the jobs report from Friday suggests that leisure and hospitality, that sector of the job market, is improving massively, which to me indicates that there's a massive bounce in demand there. And we saw some proof of that last week with the Caesar Palace earnings rally. Data suggests that more people are going out and about, they're feeling more comfortable, getting their vaccine, and they're going out to some of these events. They're going to theme parks, they're going to Vegas, they're going all over the place. And that's going to become more and more true as we leave the pandemic into the summer and fall. And with Disney parks accounting for a large chunk of historical revenue for Disney, this is a big deal. They are already seeing their parks get fully booked for anniversaries and are starting to see some fading away of COVID restrictions such as temperature checks, which should allow more and more people to want to come. And honestly, Disney as a whole is a fairly diversified play in and of itself. It's got physical parks, it's got streaming, it's got a great brand image in terms of the entertainment industry, and a very, very, very powerful following. But it also has a lot of room to bounce back, with parks just starting to really get going in many places in the world, and there's a lot of room for improvement, and I think that we are going to see some evidence of that improvement this week. Disneyland's parks are largely centered in regions that are likely to have a good grip on COVID moving forward, such as California, Florida, Paris, Tokyo, Shanghai, and Hong Kong. I would make sure to pay very, very close attention to Disney's guidance for the summer, because that's going to be much more important than what they did the last quarter. In terms of Disney's price, it stagnated and trended low during the last couple of months, and that's largely because of its exposure to the growth sector. While Disney's success in streaming with Disney Plus was a saving grace for the company during 2020 and early 2021, during its massive park closures, while on the other side, streaming is now weighing Disney down as the growth sector punishes any stock that has any exposure to the next gen. And so while Disney is seen as sort of this quasi combination between recovery play and growth stock, the growth part has been hurting it for the last couple of months. But I see Disney's earnings as really an opportunity to shine through. Okay, Alibaba, Baba go Sheepa Baba. So this has been a frequent day swing and long-term trade in our community for years, and once again we are trading in a low range. But on Thursday they'll be reporting earnings. So what do we know going into earnings? Well, we know that Alibaba has put its China crackdown controversy behind it after paying a big fee. That was weighing heavily on the share price. We know that the average analyst price target on this bad boy is $311, which is 38% of upside from Wall Street, which is really saying something. And we know that the last 3 times that Baba was trading at or near this level were good entry prices for the ticker. Alibaba is also an interesting beast in that it has a very strong crossroads between both tech and value. For example, just to showcase the extremes, Kathy Wood of ARK Invest, she's a strong believer in Alibaba, but then on the other hand, Charlie Munger, who is a huge anti-tech, don't believe anything about tech sort of guy, big value investor from the last 50 years, well, he's also bullish on Alibaba. But at the end of the day, the numbers just make sense. China is the second largest economy in the world, and Alibaba has been a leader in that market as well as abroad. I think the odds of Alibaba returning to $310 in the next 12 months are extremely high. But in the meantime, of course, the question of higher or lower interest rates and whether Wall Street is going to come to terms with whatever the environment is that we're facing right now does indeed have a huge impact on the stock, regardless of whether the numbers are good in terms of earnings or not. But I'd argue that these prices are great deals if you have a long-term outlook. Okay, next, for short-term traders, I pay very close attention to JNUG and JDST. They've provided many good setups last week, and they will continue to do so. We've seen gold continuously fluctuate over the last few weeks, providing sometimes 5 to 10% moves intraday, which is great for short-term traders. But if you're new to leveraged ETF pairs, JNUG and JDST are basically inverses of each other, so you can play off both sides of the move. JNUG and JDST basically track the gold miners, and if you see gold mining as a sector booming, you'll start seeing a pop-up in JNUG. If you see it selling off, you'll see a pop-up in inverse JDST. The power of leveraged ETF pairs is that, hey, you can be direction independent. It doesn't matter if things go up or down. You can play both sides of the move. And as a lot of people worry about inflation and US dollar weakening, well, gold is going to continue to have a lot of volatility, and I would definitely make sure if you're a short-term trader to have these on your radar. Folks, that caps off the video. Let me know in the comment section below if you have a ticker you'd like me to discuss in the upcoming video. And of course, quick plug, if you'd like to learn how to trade, would like access to our private chat and daily morning briefings where we brief on all the biggest catalysts each and every morning, well, I'll go ahead and put a link to ZipTrader you below. But folks, please only join us if you're going to commit yourself to the process, practicing paper trading with every single concept, and then never giving up when times get tough. The program was thoughtfully created to give you a process to learn and grow, but if you don't complete the structure and dedicate yourself to doing every single lesson and doing it as and completing it as designed, then you're not going to get anywhere. When I buy something, I make sure that I'm going to get my money's worth out of it. So I expect you to do the same. And if you'd like to take the leap and join us, I'll go ahead and put a coupon code in the description below. Battlefield 75 will get you $75 off before checkout. You just put it in the little add coupon code spot before checkout. And if you're wondering what broker to trade these stocks on, we always like to send new traders over to Webull. I'll put a link to them below as well. And signing up and depositing with the link below will also get you some free stocks. Anyways, have a great day, and I'll see you in the next video.